There's been a lot going on in the renewable energy space and specifically with solar energy stocks over the last 6 to 12 months. To start 2024, I want to take a step back and sort of lay the groundwork of what's going on in the industry, the things that investors should be watching for, and where opportunities are going to arise first, where we're going to see those green shoots, and where that's ultimately going to play out long term. Because the rise in interest rates had a huge impact on a lot of these companies in 2023. There was also the change in net energy metering 3.0 in California, but some of the impacts were actually pretty predictable. And I think on the same token, we're going to have some pretty predictable impacts in 2024. So that's what I'm going to get into today. Try to give a full overview of what's going on in the industry to help investors with all of these stocks. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they're going to give you their top 10 stocks to buy right now. So check that out. It really helps out the show. I'm going to start this discussion with the installers. So the companies that are actually the boots on the ground putting solar systems in place. And the two companies I'm going to focus on are SunPower and Sunrun. Sunrun is the #1 market share in the US. SunPower is #2. The third player is Sunnova. And what we saw throughout 2023 is that the pace of installations was going down and the margins per installation was going down as well. Some of that pressure was coming from higher interest rates, so their cost to offload some of the financing that they have was going up. And some of it was because customers just weren't going solar at the same rate, particularly in California. So let's go through a few of those things. I'm going to start with SunPower, and there's a couple of things to note here. First of all, their new customer guidance for 2023 was previously 80,000 to 100,000. So the number of installations that they're going to have in the year really declined sharply, and a lot of that happened later in the year. And this is a big reason for it. The retrofit bookings, this is not new homes, but homes that decide to go solar. So basically, there's two pieces of SunPower's business. If you're looking at residential solar installations, there's the retrofit business, and then there's the new home business. New homes are a little bit different, something that SunPower has done really well. But retrofitting is actually a bigger percentage of the business. And what we saw is that particularly in California, changes in net energy metering 2.0, which went into effect in the spring, depressed the number of installations in July and August. That started to pick up in September. So remember I was talking about green shoots earlier. This is exactly what I'm talking about. California, there was a pickup. Texas, there was an increase. Florida, Colorado. So a number of different increases. And this is just September 2023 versus August 2023. And this is bookings. So again, we're not talking about revenue yet. That would come in the fourth quarter or first quarter likely, because there's a lag between when these bookings are made and when systems are actually installed. So these companies are growing, but they're not growing as quickly as they previously thought they were. The other thing that we saw is that margins are getting worse. So SunPower is expecting, I believe it was between $2,000 and $3,000 in adjusted EBITDA, proxy they use for cash flow from each of these projects in 2023. Now they're expecting just $1,000. So that's not enough for them to actually be profitable as a business. This is where you have the problem. Growth is slowing from a volume standpoint and margins are getting worse. That's why a lot of these stocks were down. And I mentioned the two reasons for that. Interest rates taking a bigger cut out of the financing that they need to have for particularly leases and power purchase agreements, and higher costs that aren't being passed on to customers, at least not yet. I'll just note here this new home installation up 26% in Q3 versus Q2. So this is a SunPower specific. Sunrun doesn't do quite as much of this, but that is another one of those minor signs of strengths that we might be seeing some green shoots in the industry. Sunrun reports things a little bit differently, but this is a look at their creation costs, which would be this orange segment here. So upfront costs, installation, general and administrative, sales and marketing, all the costs that go into each installation. It's very expensive to install solar. So that is what they're saying is their cost. And then their subscriber value is what they call it. And there's two pieces to this. There's the contracted value and the renewal value. The renewal value is something that I have been critical of. I'm not going to dive deep into that on this video, but I think we can just take this $3,681 number out of the value creation and just subtract it from either this present value number that we have $11,000, or we should probably be using a higher discount rate of 8%. So $4,715. So subtract this. And Sunrun is making about $1,000 in present value if you use an 8% discount rate. So about similar margins to what we see at SunPower. But Sunrun did report some interesting trends that I think we should keep an eye on. Again, looking for those green shoots. The cost of solar modules and batteries. Now, this is something we've known about for a long time with solar modules, but batteries coming down extremely quickly as well. So the price of those products is coming down. That's important because in California, it's now more cost effective to install solar with a battery system included. So that's going to be really important for the long-term future of the industry. That'll actually mean that there's more revenue coming from California from each installation, maybe even more margin. So ironically could be good for these companies, but it'll take a little while to get there. We also see rising utility costs. Solar is typically going to be compared against what it costs to get electricity from the grid. So no matter where you are, this is going to be the competing force. And you see this jump in 2022. This will continue in 2023. A lot of utilities are looking for pretty big increases because interest rates are going up, labor costs are going up, fuel costs in some places are going up. So there's an accelerating trend in the cost of energy that should make solar more cost effective. But again, we have these short-term headwinds with rising interest rates and rising costs for installers. So it'll take a little while for these increases that are going to be implemented not only last year, but also this year to make customers go, hey, wait a minute, maybe I want to install solar right now. So the backdrop is looking pretty positive from an energy perspective for these installation companies. Now, this is the other piece that I want to highlight because Sunrun has been a little bit more explicit in calling this out. They are saying that the hardware cost reductions are expected to be realized in coming quarters. This will be relevant when I start talking about Enphase and SolarEdge. But they said the hardware peaked in about Q2 2023 at $13,200. That is expected to come down by $3,000. This is for a battery backup system. So we have a cost reductions expected for batteries, modules, inverters, racking, and freight. All four of those are expected to come down through Q4 2024. So just less than a year from now. That is a massive reduction in costs and comes from the fact that these are ultimately the buyers of the components in the market. And so they're going to be putting pressure on companies like Enphase and SolarEdge. Remember, those two companies are not only selling inverters, but they're now also getting into the battery market as well. So something to keep in mind as we look at the industry in the future. So the lay of the land for installers is that there was a lot of headwinds in 2023, but some of those are going to start turning into tailwinds in 2024. The one that I haven't mentioned yet is that interest rates that are going to be a proxy for where their borrowing costs are going to be have actually started to come down. You don't want to look at the Fed funds rate, which is a very short-term rate. That's the one that gets a lot of attention in the media. You want to look at the 10-year rate, and the 10-year rate has actually come down over the last 2 or 3 months. So that's going to mean that the borrowing costs that companies like Sunrun and SunPower get in the market for the systems that they're selling to investors and to other partners, those borrowing costs are going to come down. So that's going to be a positive for the industry as long as those rates stay low. And it looks like with the Federal Reserve anticipating they're going to cut rates in 2024, at least we probably won't see a huge spike in rates. I don't know if they'll stay as low as they are, but looks like we're in at least a stable environment for the rate environment. It should be a little bit better than we had at the end of the third quarter. But after a quick break, I'm going to turn to the component companies because this is a different segment of the market.
Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now.
So now I'm going to move to SolarEdge and Enphase Energy. So I'm going to start with SolarEdge, but these two companies are going to face similar dynamics in the market, and that's because they are component suppliers. So the companies I talked about earlier, installers, are going to be their customers at the end of the day. As installations slowed down in 2023, they not only didn't need to order as many components from these companies, they also reduced their inventory. So you have sort of a double whammy for both the third, fourth quarter, and then probably into the first quarter of 2024. Now let's turn to SolarEdge, where conditions are getting worse pretty quickly. $991 million in the second quarter in revenue, $725.3 million in the third quarter. Margins also dropped to 19.7%. So a pretty quick drop there. And if we look at their units shipped, just falling off a cliff from the power optimizer's perspective, that may mean that Enphase is taking some of that market. So maybe there's a little bit of a shift in market share there, but not the right trend that you want to see. Same for inverters. These numbers are starting to come down. But you look at guidance, and that's where things get really worrying. Again, we're going from $991 million in revenue in the second quarter. For the fourth quarter, we're expecting just $300 to $350 million in revenue, gross margin will be 5 to 8%. So just a rapid drop off in the amount of revenue and margin that Solar Edge is making. So massive challenges for them. And again, like I said, these installers need to see their businesses pick up before they're going to start ordering and increasing inventory again. So that's really the headwinds that they're facing. Probably going to be the worst in Q4, and then maybe things get a little bit better in the first quarter of 2024. But this is going to be a really rough patch for these companies. If we go over to Enphase, you see similar trends. Now this one is going to be read right to left. So $711 million in revenue in the second quarter, 551 in the third quarter. But again, if we go down to guidance, you get $300 to $350 million in guidance. They are expecting a higher gross margin. So one thing management talked a lot about in their conference call basically said, hey, we're not seeing pricing pressure yet. I would be shocked if we don't see pricing pressure at some point in 2024. Maybe it isn't hit them in the fourth quarter of 2023, but like Sunrun said, they're expecting these component costs to come down, and that's going to help make the installer's business better. And ultimately, the component companies don't have much of a business if the installers are struggling. So this is really going to be a challenge for all of these companies to try to make their way through. So in the residential market, it's pretty clear where we're at right now. There was a lot of headwinds in 2023. That's going to continue at least a little bit into 2024, but we should see a pickup in bookings and installations. SunPower and Sunrun is where you're going to see that happen first. The lagging indicators is going to be growth from Solar Edge and Enphase. So they're going to be the companies that are going to get there. So they're going to see that benefit next, but it's probably going to be more mid-year or end of the year. The one company that I haven't talked about is First Solar, and they're actually one of the biggest players in the industry, but they don't have a lot of exposure to the residential solar market, where their more focus is the utility scale market. One of the reasons that they've done really well over the last few years is their technology has been differentiated, and they're the leader in manufacturing in the US. So as you had a ton of tax subsidies come into the market in the US, First Solar was the clear winner there, not only for installers, but also getting benefits to build out their manufacturing plants as well. And First Solar is booking out sales multiple years. I mean, this is really the big difference between residential and utility scale solars. Residential solar, they're going to try to sell a solar system and install it a few weeks later if they can, depending on what the permitting process looks like. At worst, you're talking about a few months. First Solar is saying, hey, we know what our sales are going to start looking like in 2027, 2028. That's where their contracts are being signed right now. So very different markets, very different upside. If we do see upside in the market, we're going to see it first in the results and the guidance from those residential solar installers. So if you're interested in this industry, I think that's where I would be looking first. And then the lagging indicators would be those component companies. First Solar, a little bit off on its own because it's focused on utility scale solar. So hopefully that gives a good overview of what's going on in the solar industry right now. A lot of moving pieces, but should be a much better year in 2024 than we had last year. What questions or comments do you have? Leave those in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next.